Testing, testing. Testing, can everyone hear me? Right, I can see a bunch of you guys coming in. Jerome, Damir, we got Diaby. Right, good stuff, good stuff. Everyone's on time today. We got, this is Oyeni. Oyeni, did I get a name right? Juha Gupta. Nice to see you guys tune in. Nice and early. Good stuff, man. Right. Webinar chat. Can everyone hear me? Just testing. Awesome stuff. Awesome. Right. Hey guys. Hey, nice to see you tune in. Thanks for joining me. Right. If you don't mind, so yeah, there's this little drop down that you can select when you're typing a message. It's either to host and panelists or to everyone. Well, what I always recommend people do is to have the drop down to everyone. Right. The reason for that is so that you can see each other's questions. And that would help you better understand when I suddenly answer a question midway throughout the webinar, right? You understand which question I'm answering, right? So yeah, if you can just have a little drop down and change it to everyone, that'd be great. And if you don't mind me asking, guys, like, where are you guys tuning in from? Which country are you guys tuning in from, right? Just let me turn on my aircon. It's so hot here, right? There we go. There we go. Questions. Here we go. Here we go. All right, cool. All right, so we got guys from Finland. That's nice. Germany, Nigeria. All right, good stuff, man. Good stuff. Finland. Right, Finland's, yeah, all very nice places actually. All right. Hey Sumit, nice to see you again. Nice to see you guys here. Senegal. All right, that's nice. That's nice. Thanks for tuning in, guys. So I guess for most of you guys, it should be somewhere in the morning, right? Pretty early morning for you guys, if I'm not wrong, right? Which is good, right? Today's session is pretty fun. Today's session is pivot point trading strategies, right? I actually use it to complement my trading strategy pretty well, right? Very, very good for reversals, okay? Not so good for breakouts, all right? So yeah, if you like to play reversals, pivot point trading strategies are pretty amazing. Okay, right? Sorry, my mouse. This thing just keeps dropping. Okay, yeah, pivot point trading strategies are really good, and I'll be sharing with you today, right, on how we can use them in trading. I do want to encourage you guys that if you have questions, I literally have another screen open here to answer your questions. All right, so don't wait until the end of the webinar, right? Because we usually don't have time at the end of the webinar to answer questions, right? So try to ask them throughout. As and when you have, if it's relevant, I'll be able to answer it, okay? So yeah, pivot point trading strategies, risk warning first, and disclaimer, everything this webinar is educational in nature. So, please do your own due diligence. It's not investment or trading advice. All right, let's begin today's session. Now, if you guys don't mind sharing with me, how many of you guys here use reversal strategies, and how many of you guys use breakout strategies? Right, the difference is that, yes, a reversal strategy is like this. Price comes here, it reverses. A breakout strategy is when price comes here and it breaks out. So this is this is a breakout and this is a reversal. Okay, maybe if at time we'll take a look at euro dollar later, right? Especially with the pivot points and stuff, right? Because we'll be jumping in quite quick on that. Yeah, but I kind of want to know, do we have people here that use reversal strategies, or do we have people here who use a little bit more breakout strategies? All right. And may take a time to answer. I can see some answers coming in direct to me, right? So I got pivot, got reversals, a good mix of reversals, got a good mix of breakouts. And the good thing about pivot points is that it's pretty useful, right? It's pretty useful in calling this reversal. Dahiru, right? Dahiru, nice to see you tuning in from Nigeria. Welcome to the show. Welcome to the webinar. We're gonna have some fun. Okay. Now, so a little bit about me, introducing your host for today. My name is Desmond Leong. So I run the award-winning research firm Everest Fortune Group, right? Finalist for 2019, 2020, 2021, Best FX and Best Equity Research, right? So we usually work with major financial institutions to let them know where the markets are heading. But we have a special partnership with IronFX where we're bringing you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level. Okay. Now I do want to point you to a couple of places. Let me see if I have it here. One is ironfx.com, right? One is ironfx.com over here, right? At ironfx.com, you can go to IronFX School, and there's this thing called a VIP room. Okay, the VIP room, as the name suggests, right? It actually gives you. Just let me log in first, so that you guys. Oops. Okay. Yeah, just let me log in first to show you an example. But the VIP room, as the name suggests, allows you to really get treated like a VIP, right? You get direct access to me, get direct access to my team, get to ask us questions on where the markets are heading, and we'll be able to answer you. So if you want to be more profitable, right? You want to become a better trader, you want to improve your technical analysis, you want to get, if you have a trade and you, like, for example, right, we have here Sumit, if you want me to ask me a question on euro dollar, right, and you don't want to wait for another webinar, right, 1 week later, right, a great place that can do that is in the VIP room. You can just tune in and you can ask me a question there, right? I'll be showing you how it works, but it's a really great place. Hey, Desmond Leong, can you give me an analysis on euro pound? And I'll be able to jump in right away and answer it. Depending on your account size, you need a minimum of $250 to get in. The more you put in, the more access you have, right? And of course, the more access you have, at $15,000, you get ability to direct message me. We got private one-on-one session, private group call every 30-minute group call. All right, really simple, right? You just need to log in, right? And within the client portal, you should be able to see the VIP room. I think it's, let me see if I have it over here. Did I get the correct login? Yeah, so by the side on the left, you can see it over here, VIP room. This is a test account, of course, right? And within the VIP room, if you have all the requirements, you click login and you're in right away, right? So, these parts will be automatically filled up, right? So the more funds you have, the higher access level that you have. And this is how it looks like within the VIP room. Just give me a second and let me show it to you guys. Okay. The benefit is that, yes, it is really meant for you to improve your trading, right? It's meant for you to ask your questions, right? So you might have a question in here, right? And you might come down to, for example, Sumit, right? You have a question on euro dollar 1 hour chart, right? So you can come down here. Let's jump down to the 1 hour chart on here. You're looking at this and you're like, come in here. You put this horizontal support line over here. Hey, Desmond, could price potentially bounce from this support line? Which support line are you referring to? You just need to highlight the text, click this little button called link object to text, and click whatever line you just drew. In this case, we just drew this line. So when you send this message through, and anyone, not just me, is reading it for the first time, I'll be like, hey, Desmond, could price potentially bounce from this support line? When I hover my mouse over, I'm like, oh, this is the support line you're referring to, right? So I will come in here and I will say, it could actually bounce here, right? Which might be a 23% retracement, right? 23% retracement, okay? So I say, yeah, man, price could bounce from that level to the 23.6% Fibonacci retracement and an overlap resistance. Where's the 23.6 retracement? I'm going to select it over here. Where's the overlap resistance? I'm going to say it's over here. Bam, send the message through, right? And if anyone's reading it, they're like, oh, where's the 23.6? You can see when they hover the mouse over it, it lights up. Where's the overlap resistance? This is where it is. So as you can see, you're able to ask me very, very specific questions on your trades. And this is how you become a better trader. This is how you can practice, right? Practice and keep honing your skills, right? And of course, the more you hone it, the more I can answer it, right? And the more I can correct you. If you're right or you're wrong, I can correct you and you can become a better trader, right? And of course, you can see how I do it, right? Sumit, that's awesome. I hope you have access to it already. I don't see you over here. I see a couple of people here. I don't see Sumit. Sumit, are you here? Right, you're not here, Sumit. Then you should be in here, Sumit. Right, go register with your live IronFX account. You will get access to this place right away. Okay, so I see you guys there. You find me and my rest of my team in this room. Let's begin today's session. Okay, so yeah, I know a little bit more about me already, right? Some words of encouragement I share with you guys is that I look pretty young, and I am pretty young, right? To some level, right? 33 years old this year, right? A full-time trader, right? Well, I had started trading 7 years ago. I was not a full-time trader 7 years ago, only in the last few years. Then I managed to cross that milestone, right? And it's more because of what I learned, right? And what I do want to encourage you guys is that you don't need 30 years in Bloomberg, to be a good trader. You don't need 30 years going for all those trading courses that you find online, right? You don't need to go for those to be a good trader, right? You just need 30 days learning the right things, right? 30 days learning the right things, and you can turn your trading around and become a better trader. Okay, that's one big word of encouragement I share with you guys. So here at IronFX, yeah, we have the best education, right? If I'm living proof of it myself, right? No, I mean, no fancy cars, no nothing, right? No like Instagram profile kind of person, right? I'm not driving a Lamborghini around, but I, make a decent living, right? Doing what I like, which is trading, right? And all you need to know is that it takes it the scary thing about trading is that it is very different from the world of academia. Shit, did I pronounce it right? Academia, academia, right? Right. So the people, we're very used to we're very used to the concept that the more we study, the better we do, right? That has been the case since we began school, right? You don't study for an exam, you're gonna fail, you're gonna flunk, right? But the more you study, the better you do. The less you study, the worse you do, right? So that correlation has been ingrained in us from young, and that is a danger when you go into trading, right? Because when you go into trading, a lot of people think the more I study, the more webinars I attend, the more books I read, the more strategies I learn, the more indicators I apply, the better my trading is going to be. But the scary thing about that is that it's not true, right? The scary thing about trading is that you can run full speed in the wrong direction, right? So imagine everyone on a racetrack, they're running full speed ahead. You turn around and you run the wrong direction, right? That's a very, very dangerous thing in trading, because a lot of people, they teach you the wrong strategies there on Baby Pips, Forex Factory, right? I know people share their trading ideas there, right? You go in there, you try to apply it, you lose money, right? And that's a scary thing, right? You can learn the wrong things in trading, and not all knowledge. You can learn the right things, but if you apply them wrongly, you end up losing money, right? So that's another dangerous thing in the world of trading. It's not only about learning the right things, but yeah, you need to learn the right things and need to combine them correctly. If you try to combine too many oscillators, right? You use a stochastic, RSI, MACD, right? And then you look at the chart, it's like, oh, all of them says it's overbought. Time to sell, right? And when that happens, you end up losing money, and you're like, why did it happen? It's because your strategy, your analysis is too one-sided. You're looking at too many indicators. Then there are the people who only use moving averages, right? They just use all the moving averages. They try to catch the trend, right? They lose money and they wonder why. It's because you're relying too much on trend trading, right? The best kind of trading strategy actually combines multiple indicators, multiple strategies to counter check each other, right? And give yourself what I call the high probability reversal trades. No, high probability trades, whether it's reversal or breakouts. All right. In today's session, a great way to combine to use a particular kind of indicator to call the reversals are actually the pivot points. Okay. Now, so you might be wondering, like, what's the agenda for today? I'll be talking really quickly, not so much of the definitions. I don't like to talk about definitions, right? I think a little bit boring, but the pivot points, right? Basically, all you need to know about pivot points is that they when your market opens for the day, or depending on the time frame that you're at, it always have a pivot. Then there is like resistance 1, resistance 2, resistance 3, support 1, support 2, support 3, right? This is the pivot over here. That's why they call it pivot point, right? So sometimes, Uh, the idea is that when the market opens, it's over here. It can come up to here, then it can reverse. It can come down to here, then it bounce. As long as it's within the day, these levels are valid. Okay. Now what I noticed is that pivot points, right? I mean pivot points technically can go up to 1, 2, 3, 4, 5, 6, many different pivot points. But the best ones are actually the first and the second, right? More particular, the first and the second. They are the strongest pivot points. Okay. And they differ based on time frames. I'll be showing you some examples later, right? Real examples later on how you can use pivot points. Okay. So all you need to know is that yes, if you pick a certain pivot point at the start of a certain time frame, you get to see where are the forecasted levels where price will react and bounce from. The purpose of these pivot points, right? The purpose of these pivot points is not to try to play a breakout, but it's actually to play the reversal, right? If you use it for breakouts, it's a lot less effective, right? So it's more useful for reversals. Okay, now let's begin. Let's continue from here. So what are the different types of pivot points and the pros and cons, right? There are mainly, if I'm not wrong, 4 or 5 main pivot points. I'll be touching on them pretty quickly. Okay, the standard one, really simple, right? So it's the most widely used one. It's very easy to calculate, but these days you don't really need to calculate it because you have it all in indicators, right? For example, I can have this indicator over here, right? And it shows me all the pivot points, right? I have the pivot point of this, I have this pivot point, I have this pivot point, right? You notice that each one, sometimes how they behave is really nice, right? So the calculations, you don't have to worry too much about it, right? But it does provide a good overall picture, right? So the difference with the standard pivot point, if you ever wonder, is that it does not take into account the opening price. Okay, so because of this, it can be less accurate. Okay, that's the main difference, right? The main difference is that it does not take into account the opening price. Woody pivot point, not to be confused with Toy Story, right? So it's very popular among short-term traders. It uses the current period's opening price, and it provides more weight to recent price movements. All right, so that's an important thing, right? Provides more weight to recent price movement means that it kind of adapts to the market slightly faster, right? The cons is that yes, it's less widely used, which actually is not that much of a con, right? It's less effective for longer term trading and may not work well in markets with low liquidity. It kind of happens. Most pivot points don't work that well in markets with low liquidity. Okay. Camarilla pivot points, even less known, but it is very popular among day traders, right? Now the important thing about here is that it's a little bit hard to calculate, but don't worry about it, right? Because I'm going to show you how you can find it later on TradingView and maybe on some of the MT4 indicators out there, right? But the thing about it is that because it moves very fast, it requires frequent adjustments, more frequent adjustments than the other methods. My kind of like my personal favorite is the Fibonacci pivot point, right? It's very good, pretty effective in trending markets, and you can actually use it with other Fibonacci tools. I'll be showing you how to use it later, right? The only problem with it is that yes, it kind of, some people say it's less accurate, but we will do a visual comparison later and see how accurate it is, right? And that'll be the fun part. That'll be what we're going to spend quite a bit of time looking at. Okay. The last one is very popular among institutional traders is the D-Mark pivot point, right? Very good for finding trend reversals like all of them are, but it's a lot harder to calculate, understand. Thank goodness, we have indicators for this, right? And let me show you how it works, okay? Well, over here now. Okay, so can I get a show of hands just in case I go can I know how many of you guys use TradingView over here or are familiar with TradingView, right? As you can see, TradingView over here. Just so that I know that if I'm talking about TradingView, you guys don't get lost, right? But yeah, can you guys let me know how many of you guys use TradingView? Testing, testing. Okay, sorry, I'm back, right? Just here. All right, so okay, we got Oyeni, we got Sumit using TradingView, right? I saw Juha doesn't use TradingView. All right, if you don't use TradingView, you should consider using it. It's not bad, right? It's free to use, right? But more important, one of the nice things about TradingView is that you have a lot of access to indicators, right? So you can click indicators over here, type in pivot point, right? The one that you want to select is the standard pivot point. So when you select it, a whole bunch of stuff appears where you can edit, you can show and you can hide it over here, okay? So when you press the gear icon, right, you press the gear icon, you get to edit it a bit. And you can choose traditional, woody, classic, which is demark, we got Camarilla. I usually, in this case, let me pick, I think we are traditional, we're going to use demark, right? And the important thing is that you get to pick the time frame. Okay, you get to pick the time frame. So rule of thumb, right, is that the daily time frame tends to be the best if you're trading anything intraday. Meaning that, okay, let me explain that again. Sorry, just let me explain something here. I tend to use the support 1, support 2, resistance 1, and resistance 2. Okay, so as you can see, right, let me just throw in a pivot over here. So the pivot is this orange thing. So at the start of a day, right, at the start of a day, the market starts off maybe over here. Let me just zoom in. So the market, the pivot point starts over here, right? Right about here. So you have the support and you have the resistance, right? This is the support and this is the resistance. Remember, resistance is always above price. Support is always below price, right? So price can come down, touches the pivot point and it stops for a while, okay? Once this is over, right, notice that it doesn't touch the resistance and that's fine. Next day, this pivot point is created, okay? Price comes pretty close to a pivot point and then it reverses, stops for a while, then continues going down. So you can see different pivot points, right? This is, let me show, I will need this particular thing called a date range, right? So at the start to the end, 23 bars, 1 day. Okay, so on 24 days, 24 bar, then it's the next day. Okay, so this is day by day. So when you have a pivot point and you choose the pivot time frame, if it's daily, it'll be 24, right? If it is weekly, you notice that the pivot point is stretched much further, right? I believe it is, if I take a rough gauge, right, 7 days, exactly 7 days, right? So you need to be careful on which value you pick, okay? Because see, in this case, we pick weekly, and if we were trading the 5-minute chart, right, as you can see over here, right, it's gonna take forever, right, for price to kind of reach one of the pivot points, right? It's way too far away. So when you're trading anything like 1 hour or 4 hours, right, the using a daily pivot point is okay, right? This looks okay. What you don't want is, in this case, if you use a pivot point that is, okay, I use a daily pivot point, like you can see, this is still fine, but you will notice that on the 4-hour chart, it starts to become a lot less effective. All right, so rule of thumb, if you're on the 4 hours, you usually use the pivot time frame, which is weekly. So you notice how price has a little bit more time to come down and test these levels, right? Because you see on the flip side, if I were to use like the daily time frame, you notice that this is too messy, right? There's so much resistance back and forth everywhere. So you can, like, the pivot point can be formed over here, but you barely have enough time before the next pivot point is formed. Okay, so that is the danger of using the wrong pivot point time frame based on the chart that you are analyzing. Okay, so as you can see over here, let me share with you my formula for the 4-hour chart. Right, 4-hour chart you want to use weekly. Okay, for H4 chart you're using the weekly weekly pivot point. Okay, on the 1-day chart, as you can see over here, you are using the monthly. There you go. So on the D1 chart, right, you're using monthly. So it gives you a bit more time to react to stuff. Okay, and you can see that price actually does react pretty nicely on certain areas, as you can see. Right, not everyone kind of works out well, but I will show you how to get the most out of it in a bit. Okay, now if you were on the 4-hour chart, right, not on the 1-hour chart, you notice that it doesn't make sense to put such a long time frame on the 4-hour chart. On the 1-hour chart, you use the daily time frame. Right, so on the 1-hour chart, you will use pivot point time frame daily. Okay, gives you a little bit more time for price to go down to your pivot point or go up to your pivot point, to test the levels. Okay, these are a few key rule of thumbs, right, when it comes to using pivot point in trading. Okay, now let's go to how I use the pivot points. All right, so let me show you what I call pivot point confluence. Okay, so you can see over here, I got resistance and I got support. Right, let me just try to I think the 4-hour chart is slightly clearer. Right, so I'm going to just use this. All right, so we got some resistance and we got some support. What I then do is in this case, I will go for the weekly. I'll show the next one. You can see over here. This is where the trading view actually allows you to set up, what's the word for it? To set up different kind of pivot points, right? So this one is the traditional one, as you can see. It's a traditional one. This is the traditional. This is the Fibonacci. This is the Woody. This is the D-Mark, right? So I got a few more. I can use a Camarilla if I want to, right? And the good thing about this is that now you have a lot of pivot points, and it's going to look quite confusing, right? So what I tend to recommend is that if you can, right, zoom in, right? Zoom into the market itself today. You can see the way price, what you're looking for, right? What you're looking for is how well price reacts to different pivot points. Okay, so you can see here, right off the bat, when price, okay, you know what? We're just going to go for S1 and R1 because everything's too, it's a little bit too messy, right? So we're going to just go for the first support and the first resistance, which actually is the strongest level, right? It's usually not the resistance 1, resistance 2. Okay, so these are some of the strong levels to look out for. You can see that the moment price open, it reached this resistance, right? And then it started to reverse. It then broke, of course, it broke the supports levels, as you can see over here. What you're then looking out for is how well price responds to these levels, right? See how well price bounce off this support, right? This one, what you're looking for is when these 4 colors line up as closely as possible to create a concentrated area of support or resistance. Okay, it creates a concentrated area of support or resistance. It doesn't work all the time, but it does give you a pretty decent chance, right? So you can see 3 of them lining up here. Very nice reversal from there. Okay, not all the time it works, but yeah, you can see the more things line up, usually the stronger it is, the stronger the reversal is, right? You got a few things lining up here, bounces, right? But yeah, this is an idea, a gauge on how you can actually use pivot points. Now, I do want to show you one more thing when it comes to pivot points, right? So let's just talk about the traditional pivot point first, and go to here. Okay, so this is how you can actually use it in trading. Okay, this is how you can actually use it in trading. Let me see if I can give you a better example. Nah, I think monthly is slightly better. So let me find a chart which has a little bit more which is a little bit more relevant, like as in like price is close enough to a level. There we go. Okay, so this is an example, right, on pound dollar. Okay, on pound dollar. So on pound dollar, what I have noticed is that price previously bounced off this level. I mean, this is a big support level. Okay, this is a big support level over here, right? Price bounced off this level one time very strongly in the past. Now price is testing this level. How do you know whether price is going to bounce from this level? Right, the trick to that is actually maybe you throw on a big pivot point. You have noticed that the previous pivot points all reacted very, price reacted very nicely to the previous pivot points. And now, not only is there a nice support level, but there is a nice pivot point support level too. So you have one reason why price might bounce. You have two reasons why price might bounce. So that automatically doubles, your confidence level that, there's more than one reason why price might bounce from here. Okay. Then if you decide to go long, it is a decent, it's a well calculated kind of a reason why you should like buy from here. Okay, you can see it's quite nice. Honestly, it's quite nice. So another example. Look how nicely price bounced from this pivot point. It's crazy, right? But what is equally crazy is that yes, price is close enough to the support and pivot point. So what I might do instead is I would then highlight this area as a support area to play a bounce from. Right, this will be a support area to play the bounce from. And of course, yeah, in this case, price works out quite nicely. You can see that the bounce actually did happen. But yeah, this is how you can fine tune your support, because your support level might be down here. Price would have missed your entry, right? But if you then have a pivot point, you have a higher chance of being able to forecast that, yes, this is a potentially really good level price might bounce from, right? Aussie dollar still a little bit far away. Dollar CAD still a little bit far, almost there, right? Very, very nice. What we are looking at WTI, right? So WTI, same thing the previous analysis did highlight. Can you imagine, right? There was a big reversal here. As price was approaching this level, we also noticed that there's a nice first resistance for pivot point, and that gave us the confidence to take the trade and to sell, right? Basically making some money. You can throw in additional stuff, right? You can throw in, if I'm not wrong, this is a Fibonacci projection, 78.6 Fibonacci projection to give you an even higher chance of a reversal. Okay. Now, as you can see, yeah, this is an example of how you can use pivot points and you line it up with support and resistance levels. Okay, I'm going to put the open the floor to some questions. Do any of you guys have any questions you'd like to ask me as of now during the webinar? Right? Please please respond. Let me know. Okay, I'm back. Right. Okay, Juha is already requesting for Brent. Right. Brent crude oil, WTI, right? More or less the same analysis that we have. Right. Jerome is clear. That's good stuff. Where's my drink? Okay. All right. So now, Ukasha is asking how do you add pivot point on trading views? Yeah. So if you're on trading view now, right, let me show you a step-by-step guide. First thing, you're gonna click on indicator up here. Okay. Ensure that you open the charts first, right? So that means if you are on trading view, you want to click on, go to product, and you want to click on charts. Then you see your charts appear over here. Okay. So when your charts appear, you maximize them, whatever it is, right? And now you have, for now, you don't have any pivot points, right? Click on this thing called indicators up here, right? And search for pivot point. You will find a few of them, right? I have tested out quite a number of them extensively, and the one that works the best is the pivot point standard. Okay, click on that one. it will load the pivot point for you, and of course it sometimes might look really, really messy, but yes, it will load the pivot point for you. You come in here and you can press the settings to kind of adjust it. What is your time frame, what type of pivot point you're using, which support and resistance levels you're using, is all editable and adjustable from here. Okay, yeah, so this is an example of how I use pivot point confluence to find levels, right? So I'm back over here, WTI, right? So yeah, I not in this example over here, right? So if I have an analysis, right, I usually use pivot points as my last confirmation, right? So I'm looking at a chart here. I'm like, okay, right? We have a resistance over here, right? I do a Fibonacci projection, right? We have 78.6% over here, right? 78.6. So I got nice little bit of resistance, right? Is there any no Ichimoku, right? And then I'm like, should I sell? Should I wait for price to come here and sell for it to go down? I mean, this is a very nice resistance. This is a very nice Fibonacci projection, right? And it looks like pretty nice. What should I do? That is where I throw on my pivot point and I look like, okay, right? I have one reason resistance, I got 78.6, and I got a third pivot point that's telling me that it's a good level. Let me look at the other pivot points, right? So the other pivot points are using, let's do monthly, right? So the other pivot point, nope. Okay, I got another pivot point that lines up there. Nope, this one's a little bit far, but actually what is the R2 for this? Where is the R2 for this though? So you can see right away that I have two pivot points that line up over here, right? It's both a green and yellow. The green one is the woody pivot point. The yellow one is the traditional. So we have 1, 2, 3, and 4 reasons why price might react from there, right? So you might see price reverse from here. And of course, we can see how it works out. It comes up and it reversed very nicely, right? It reversed very nicely directly at where the pivot points are, as you can see over here, right? Very nice test and then reversal, right? So that is one way where you can use pivot point in trading. You don't just trade on and trade, you do your analysis first, right? So initially I only had 1 and 2 reasons why there might be a reversal. With these 2 reasons, I might only put in a trade of 1% of my risk, right? But then with this, I might put in 1.5%. With this, I might put in 2.0%, right? All of it depends on like how many levels are lining up very nicely in that level. Okay. Okay, so I hope this guy gives you guys a better understanding of it, of pivot point. I mean, of course, I still do use other forms of analysis, meaning that when price goes up there, I also do look at stuff like the RSI. I see, what is happening on the RSI. I have noticed that the previous few big reversals, every time a big reversal happened, every time a big reversal happened, it seems to happen pretty close to when this kind of price RSI reaches the 70.3 level. So the price is back at that level, right? And it's a decent chance to play a reversal. Okay, so that's one additional way I use pivot points in trading. Okay, now I guess the last thing I want to show you guys, right, is also the IronFX. Like there are indicators out there that help you do this. I do want to check that does any of you guys use IronFX? Have any pivot point indicators on your IronFX MT4 or MT5? Do any of you guys have that? Please share with me real quick while I just take a quick drink. Okay, got Jerome who said yes. A few other you guys reply to me directly, yes. Okay, now I do have a pivot point indicator, which I guess I can give you guys as long as you have an IronFX account. Let me show you how it works. Yeah, let me show you how it works, right? Let's just say we're looking at what were we looking at earlier, right? Just say euro, dollar, Aussie dollar or something. Oh, no, okay. Shucks, was it dollar yen? I need to delete that template. All right, dollar yen, for example. We got a grid over here. We got H4. We'll zoom in a bit. And yeah, so we got a pivot point over here. And we got throw on this pivot point EA. So I actually have a EA that helps you take the trade, right? Pretty fun. It's pretty scary too. Right. So yeah, over here, quite advanced. But yeah, so I have a few ways that you can find pivot points, right? So is this one? Yeah, we're gonna nudge it a bit. So there are like the normal Fibonacci, Woody, and Camarilla pivot points. So then if we're on the H1 chart, we want to use the daily pivot point, right? So you can turn it on and you can turn it off, right? So if you turn it on, yeah, this is the daily pivot point on the H1 chart. So you can see it directly on your chart, right? You can come in here and just say, I want to see the Woody one. You can throw it on over here. This is the Woody pivot point, right? Then you what is probably a smart thing to do is to come in here and edit the color, right? So Woody, Camarilla, this resistance and support. Okay, I guess quite messy later. Yeah, there we go, right? And what about like Camarilla? Where do we want to? This is the pivot point. Woody one, where are we gonna put it? It's over here. Fibonacci pivot point. It's over here, right? So you can see like where it's starting to line up, right? So it shows you on the chart directly, so you know how to use it to trade. If you don't want it, you can just minimize it or hide it, right? So this is a pretty good EA, or rather indicator that you can use to just directly map the pivot point. So I notice there's 2 pivot points at this level, which has not been tested yet, right? So if it has not been tested, right, or has it been tested already? We got color, selected color, normal color. Okay, this is fine. This is fine. Yeah. So you can see that this is a resistance level, right? This is a resistance level to play from. This is a support level to play from, right? And of course, in these kind of examples, I realize I can't really draw on this, right? But yeah, price comes down, test this level, then you can ideally expect a bounce because of all the pivot levels there. Let me show you how it looks like when we toggle. Let me just toggle this to euro dollar, for example. Toggle this to euro dollar, right? Same thing over here. Throw on a pivot point indicator and you get a gauge on like, okay, let's see where's the key support and resistance for Camarilla. A little bit far away. Let's not bother, right? For Woody, where's the pivot point? Okay, there's a nice pivot point over here. Nice pivot point over there. So if I were to sell, I might consider to sell at this level. Let me see, price comes back up to here. I might sell because this level, maybe it lines up with a 38% Fibonacci retracement, right? So you have a 38% retracement. You got a nice pullback, right? Nice Woody resistance. Of course, I'll throw in Fibonacci, see if there's anything, right? Fibonacci happens to line up pretty closely too, right? And of course, the normal pivot point a little bit further away, right? So yeah, this is how this is what I use to kind of fine tune my analysis, right? You have a support resistance level, you have a momentum, you have a Fibonacci level, and more or less have enough ideas on where the market is heading, right? And then from there, you throw on the pivot point to help you gauge how strong it is, right? So a rule of thumb I have is that yes, if it's just the bare minimum, you can risk 1% of your account. If you have 2 pivot points that line up, you can add on another 0.5%. if 3 pivot point lines up, you can become 2.0%, right? So so yeah, you know, it's like in this example, you have a resistance over here, right? You got a Fibonacci projection over here. You got two pivot points that line up there. So you go from a low probability trade to a high probability trade, meaning that you go from 1% to ultimately risking 2% on the trade. Okay, guys. Yeah, so I hope you found today's topic useful on how to use pivot points in trading. Remember, it's about combining them together and combining them with different analysis, right? Support and resistance, moving average, oscillators, you know, stochastic RSI. It's all about combining them and getting the best out of it. Okay. I hope you found today's session useful, right? Find me over in the VIP room. You know, practice more of analysis. You know, that's a perfect place to find me. Otherwise, thank you for tuning in, guys. Right? Stay safe, trade safe. I'll catch you guys tomorrow. Tomorrow, if I'm not wrong, is Cassandra who will be doing a live trading session. You can join her. Right? She passed a couple of prop trading tests recently. Right? So it'll be a fun time for you. Right? All right. Yeah, it's Juha, right? No worries. Yeah, it's a little bit tough, but yeah, you can always rewatch this and get a better understanding of it. But learn how to apply it properly because it can really help you call your reversals and trade the reversals with much more confidence and much more accuracy. Okay. Now, that's it on me. Thank you, Juha. Thank you, Jerome. Thank you, the rest of you guys who are sending messages through. It was great seeing you guys here, right? Yeah, that's great seeing you guys. On my social media handle, for those of you guys who want to find me, right? I think you can find me Comfy Desmond. Yeah, you can find me on Comfy Desmond, right? Very simple one. Yeah, that's me and my cat, my kid, right? And of course, a video. Look at him. Look at him flying. It's so cute. Look at that, right? And coming back for a second round. Yeah, that's him. Right. Anyway, you can find me. Comfy Desmond is my username. You can find me there. Right. And yeah, that's it for me. Right. See you guys around here. Connect to me. Just connect to me there. Right. I'm pretty chill. I play FIFA. Right. I live a normal life. Right. So you can find me there. Okay. Stay safe, guys. Trade safe. I'll catch you guys next week. Okay. Cheers and peace out, everyone. Peace out. Bye bye.